All right, so listen, trying to game the market is one of the things we talk about on this show. For the most part, unless you're watching this thing minute to minute, second to second, it's ridiculous. And here's the thing, when bull markets start, there's going to be hiccups. Look at this chart, folks. This is really important. This is since 1950. First year of bull markets, there's always going to be a point where they sell off. The smallest sell-off was 5%. So if you want to be in for the big money, you got to know when to hold on, even when it feels a little bit bumpy. On that note, let's bring in the man himself, Real Talk Capital CEO Rob Luna. Rob, you talk about this all the time. I mean, It's easier, so much easier to buy a stock. And people say, I'm an investor. Yeah. And they'll tell you all the reasons they love it. It went from 20 to 30 to 40. All of a sudden, it went from 40 to 30, like, oh, get me out of here. My hair's on fire. But it is tough, right? These moves down, they're really tough to deal with. How do you deal with them?
Yeah, I mean, they are. And everybody's risk tolerance all of a sudden changes when you get a bear market, right? You know, at the beginning, they're gung-ho. They want to take the highest risk. You get a 10% pullback, and they're trying to get into Coca-Cola and Pepsi. So, I mean, look, it's difficult, Charles. And I think right now, especially, we've got a lot of headwinds against us. We've had a great run in this market right now. But to your point, if you're going to be in for the long run, which really, I've been doing this 25 years, I've done okay trading, but the money is finding. We were talking about Palo Alto. Those names early on, closing your ears, believing in that long-term thesis and letting them ride. But that does take having to get through times like this, and there's going to be some volatility ahead.
So we have a potential moment like that with the hottest sector right now, the NASDAQ 100. It broke records for the first 6 months. It's close. Right now, it's under its 50-day moving average, which for a short-term trader is a red flag. And it's hard to decide because we've got it up on the chart there. You can see it. It's hard to decide how much more risk you have if it starts to break down. Could it go to 1350? I mean, that would be a mind-boggling move lower. So these are high beta names. They trade, you know, wider and wider ways anyway. So what do you do with something like that? Do you have to know that you're in something that could be extraordinarily volatile? Or if you know that you don't have the stomach for it, would that be a sell signal?
Yeah, absolutely. I mean, you have to understand your own risk tolerance. No one's going to do that for you. So if this is something you're not going to be able to handle, and I think, look, if you look at Amazon, that stock obviously bought in the late 90s. You crushed it till now. That stock was down 90%, again, 60%. So you're going to have to put up with that volatility. You said the most important thing at the beginning. It's impossible to time it. No one can do that. Right. If you're in here, though, you're going to have to wait, and there could be a 15, 20% pullback, but that's the discipline where you got to actually add to the positions, dollar cost averaging.
Right. Or if you can't take it, sell it now.
Sell it now.
And then maybe buy it back. In an ideal world, you do have a lot of worries, though, not just, you know, you've got at least 3 things that are bugging you right now.
Yeah, I do. There's 3 big issues. I think the biggest one, Charles, is commercial real estate. Because if you think, look, when you buy a house, you're buying a 30-year mortgage, usually fixed. About 70% of people have those at 3%, 3.5% right now. But commercial mortgages reset every 3-5 years. We have a huge reset coming. And when you take a look at these buildings around here in New York City, they're in at 3%, a lot of vacancies. All of a sudden, that payment's going to come due. There's not the rent roll to be able to solve that. That issue is going to be bigger than most people think. If you look back 08, 09, everyone saw the housing crisis coming, worried about housing. They didn't realize how that would spread to everything else.
Right.
I think commercial real estate's a bigger issue.
So there will be some contagion.
I believe so.
I got less than a minute to go. You got 3 stocks you like. We already mentioned Palo Alto. CrowdStrike is another name. They're sort of, you know, in the same space a little bit. This one caught me by surprise. Disney.
Yeah. So Disney is one of those names, Charles, where, you know, essentially, you've got to buy great brands when everybody hates them. There's the whole woke disaster, which I think they're starting to learn a little bit from right now. Everybody's thrown Disney out right now. I think they just signed this deal with Penn Gaming. They got another cruise ship coming on. It's one of those things. I know people hate what's going on with Disney, but our childhood, our kids love it. I think we're going to go back to the name. 2-3 year horizon. I think you can start dollar cost averaging in here.
Really?
Yeah.
All right. I'm not with you on that one yet, but I'm glad you know, listen, it's good we get different ideas, and it is down a lot. I mean, it was trading at this level in 2014.
Exactly.
Good stuff, Rob.
Hey,
always
thanks,
appreciate it.
Okay.
Hey, folks.